Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken and our model portfolio is up 9.04% year to date. Our current stock market strength color signal is green, and here is how the portfolio is currently situated with our positions. Here are some past returns for the model portfolio. The last week, the S&P 500, which we track the ETF symbol SPY, we also refer to it as the spiders, is up 1.65% year to date. You can see that on the weekly candles, how it came up last week and broke out of making new highs. Okay, so last week we did make two trades. We made those trades on May 15th at 11:50 a.m. Pacific Standard Time. We did sell the call, we sold the put that we had out there. We took a loss on that put and we bought one call going out with the same expiration date of 12/19/2025. We changed the strike to a 580 strike and we bought that for $31.11. So here are those two transactions right there. This one here is the put that we sold for $12.69, and here is the call that we bought for $31.11. And we did take a loss on the put. So we did lose money, $381, but that's all baked in the cake. So here we have two open positions right now. We do currently still own the 200 shares of SPY, which are trading at $5.29. We have a nice $8,000 profit, or up 8.55% in that position. And on the call, which we just started, we have a $69 profit. So we're up 2.22% so far in this 3-day trade. So far this year, we've had two losing positions, but we're still up 9.04%. Here is the equity curve of our model portfolio for 2024 year to date. Very nice equity curve. Here is the equity curve for the S&P 500 buy and hold investor for the same time period. And here, on a percentage basis, are the two portfolios combined. Now, our goal is for our model portfolio in blue to be surpassing the buy and hold investor of the S&P 500 in pink. We are not surpassing them, but we're looking pretty good considering the equity curve that we have right here, and we're just trailing by 2%. Here is Fed Chair Jerome Powell. The next announcement will be June 12th. The expectation is that he's going to hold rates again. Now we're looking at things from the presidential election cycle theory, and for 2024, historically, that averages in the fourth year of President Biden's term a 6.7% return. Currently, the S&P 500 investor is up 11.39%. So that tells you that you are now top heavy according to this historical average, telling me there's going to be more volatility throughout the year. Now we are looking at things from the bond market outlook. The bond market still has an inverted yield curve, and the ratios got a little bit worse from 2 weeks ago to this current week. So there's nothing we can do about it. We have an inverted yield curve, and we have to continue to monitor it. Now, this is Warren Buffett, the Oracle of Omaha, and here is CNN Business Fear and Greed Index. We are currently in greed because the market people are hungry. They want to get good returns. So just like I did, moving my position from bearish to bullish, many people did that, and greed is increasing in this market. Now we are looking at things from the seasonality outlook. Here, going back 20 years for the symbol SPY, there's a 75% probability for the month of May, the current month that we are in, that you're going to close higher than when you opened. Well, look at this massive green candle breaking out to new highs above the old highs. So that's where we currently stand. There's plenty of room that this can drop. 5.46% it could drop and still be positive, meeting that 75% expectation. So clearly this is going to be a positive month for the month of May. Also, I did the same analysis going back 10 years and 5 years, 90% probability and 100% probability respectively. Now we are looking at things from a long-term 20-year monthly chart for the S&P 500. We are absolutely in a bull run. We are still in a bull run. Don't let anybody tell you otherwise when we are now breaking out and up. Here, I thought that we were going to experiencing a 10% correction like we did last time. We did not. We're breaking out, making new highs. That negates this whole 10% correction that we're in right now. So on next week's video, I'll be deleting that because that ain't happening right now. We are looking positive. MACD is curled up and getting ready to cross above its signal line. So this market is in for another leg up. All right, now we are looking at things from a short-term 6-month chart, daily candlesticks. You can see everything lined up really well here. And you can see the path that we're in right here, and we are just trading up and now making new highs. We may come back down, retest this level right here, and then advance. Kind of get the expectation that's may actually happen, but we'll see. Either way, we're long this market, and that's where we're at right now. You can see on the day that I did the trading was the day of the breakout. So on 5/15/24, that's when we broke out. That was the day when it was telling me, hey, this market wants to go long. All right, now we are looking at a ratio chart of the NASDAQ 100 to the S&P 500. Tells you an indication of risk on, risk off. We were in a downward trading pattern with this ratio chart, and that broke out, making this resistance line now a support line. It's currently traveling down, tells me it wants to come down, kiss this support line, and then go from there. Now we're looking at another ratio chart, and what we have here is the equal weighted S&P 500 to the normal cap weighted S&P 500. Now, when the ratio chart falls off a cliff like it did the past 2 times in the last 20 years, you had a 40% correction, and here a 19% correction. And here you got nothing. You got butkus. So we want to be prepared for that because eventually we may see a 19% pullback. But what you're seeing right now, it's not happening. Okay, now we are on the AI site called Perplexity. If you're not familiar with Perplexity is basically Chat GPT on steroids. It's just a better product. So I'm preferring this one over Chat GPT. Okay, so the first question, is the S&P 500 overvalued? The answer is that yes. Using several different metrics, the S&P 500 is absolutely overvalued. So you can put this into Perplexity yourself, ask that question, and you can come up with these answers right here. But basically the bottom line is that we are overvalued according to several analysts and financial institutions. Then I asked a follow-up question. What is the current PE ratio for the S&P 500? The answer is the trailing PE ratio for the past 12 months, it was 24 as of the fourth quarter of 2023. The forward PE ratio on earnings is 20.83. The PE ratio is a widely used valuation metric, with higher ratios indicating that the market is pricing stocks more expensively relative to their earnings. Historically, the S&P 500's PE ratio has been around 15 to 16. Therefore, the current PE ratios, both trailing and forward, appear elevated compared to long-term historical averages, suggesting the S&P 500 may be overvalued based off this traditional valuation measure. Just want you to recognize there is risk in the market due to valuation. That's why I'm presenting this. All right, now we are looking at the VIX Volatility Index or the Fear Index. And basically, we are way down here at the bottom of the chart. It's 11.99. We are under 12. So we are at rock bottom. If the VIX stays down in this range, the S&P 500 is going to do this. It's just going to continue to advance. But it is so far low, eventually we're going to have some type of a small correction and just kind of bounce around. But the S&P 500 will just truck through this and continue to edge higher, higher, and higher until something breaks where the S&P 500 will eventually fall down. But right now, the VIX is suggesting that the fear is being sucked out of this market. That's why you saw the greed on the CNN business page. Greed is increasing and fear is decreasing. You can clearly see it here in the VIX. Now we are looking at the Thinkorswim platform for the S&P 500, and this is a 5-year weekly chart. And basically, and I have standard deviations, +2, -2 in gold, +1, -1 in pink. And the regression line is in dashed green right here. So it tells you kind of what's going on here. We know that we can go just above the +1 before we start to level out and then eventually correct down. We are below that. We are at 0.75 on the standard deviation. And that is where we stand. This market was so strong that this is the little bit of a pullback we had, not even a correction. A correction is 10% or greater. This is just a small 5% pullback. Now, I'm putting in here cycles because now I'm starting to look at cycles. So as I continue to study this and move forward with my own training on cycle analysis, I'll be presenting that here into the videos. And with more info to come on cycles in my as I grow and learn more how to communicate cycle analysis to you. But here you have the major and the minor cycle coming down and then both rising out of here. Well, this is where we sit right now. So this looks, you have two rising phases here, two rising cycles, the minor and the major coming up, giving you good energy, which is going to carry this forward. So we'll see if there's a little bit of a pullback and then we bounce from there. But this is where we're at right now. So cycle analysis is telling us also to go long this market. Now we are looking at the same Thinkorswim platform, but only going back 1 year daily. And on this one, the standard deviation is at 0.5. Now we're looking at the same chart, but going back 6 months. Here we are exactly at the regression line of 0.0 standard deviations, giving you plenty of room to go in either direction. But as you know, we appear to be going up, going to be tagging that close to that +1 or tagging the +1. Now here is a chart that I produced in order to see what's going on amongst several asset classes and among the 11 S&P 500 sectors. Now, I just noticed this particular cell should be green. I try to put greens in all the 5s and 6s. To tell you on the sector strength. This is how I came up with the numbers for filling in the chart information. And then you come down here and it gives you your totals. And that one is a 5, so that should be colored green, telling you just about everything except for real estate is doing extremely well right now on the 11 sectors for the S&P 500. And these are just different asset classes. Everything is doing strong right now. And when you compare it to 1 week ago, 75 to 85, 74 to 79, strength is increasing in this market, hence the green signals. Now we are looking at a 1-year chart of the 10-year bond yields. Now, here is the upward trading channel that these yields are currently in. We did fall down from the upper end to the lower end. It looks like we're tagging it, and we have a support level here as well. And it looks like it wants to bounce and potentially go up, which would not be good for stocks. There is also a possibility that we're going to drift sideways or actually come down below this level, which stocks would absolutely love. So we're watching this to see how this plays out. So currently you can see it is just below the 50-period moving average on this daily chart. That's the end of the presentation, and I just gave you guys a ton of information. Now comes the critical thinking. What are you going to do with that information? Well, May 18th, 2024, the market summation, according to me, Ken, your friendly host with SpyTrader Now. The market is breaking out to new highs. You see that in the charts. We know that is happening. And we need to follow suit until the market tells us otherwise. You know I sold my put for a loss, and now I am in a call, a long call, on top of the 200 shares of SPY that we currently have in the model portfolio. So what do? We wait to see the market action. We want to see how the market fares to tell us what our next steps are. So I can't make that determination right now. I need to wait to see what the market does. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, hit subscribe so you can stay tuned to my channel, ring that bell to be notified when I post a new video. I thank you and I wish you good trading.